Hello everybody, I got a really great video for you today. So, I want to talk about entry criteria because I have my setups that I use, but and I often, may actually align with the big man and be able to predict the market correctly, but I get stopped out before it actually goes my way. I'm not able to capitalize on big moves because of when I enter. So if this sounds like you, if you can relate to this or have any problems, this video may be for you. So I want to just show my chart setup, what I changed recently, and I just want to take you through my entry criteria, how I determine a bias, and once I have a bias, how I enter. Because determining the bias is the easy part. Children can do that. Children do that. In fact, there's some traders who teach their kids, and they'll be 13 years old running $1 million accounts. So, these stories are out there. I can cite examples. I'm more than happy to. There's that Indian trader EG who taught his daughter. But that's just one example. There's more out there as well. I think in the Market Wizards books, I think there may be an example of that. I digress. So, first, let's talk about the bias. This is not an original thought. This was taught to me by someone. Basically, you just use the daily chart. You use your prior day high, prior day low, prior day close levels, and you just want to be objective off that. Be objective off that. What the hell does that mean? Just look at the market structure and look at the close of the latest candle. After this candle, let's go bar by bar. After this candle, makes sense to short. Short. We want to be bearish. Alright. After the third day, it makes sense. There's probably going to be some pullback. Now we're above prior day highs. Probably good to look for a short in this area. This day is a doji. Trading on this day would have sucked. This day was the day Tesla earnings came out. Gap down. Way big push down. This was like a negative 2% day on the S&P. Started at 559. Went all the way down 127 points. So we can't predict. All we can do is react. Trading this day would have sucked. I didn't trade that day, I don't think. But yeah. Yesterday was that huge range, and today, well, we're going to talk about today a bit. Alright, so now we move to the hourly. After we've determined our bias, it's good to have a bias. Like below here, you would kind of expect some buyers down here, to be honest, if it were me, because it already made such a big push. But if have a big push down and we get a pullback, it kind of makes sense we'd get another big push leg down. And I called that out 10 days ago in my video on July 16th. So yeah, I think it's pretty obvious. You could have expected another push down. Many other people predicted that. It's not special that I did. But yeah, I'm a day trader. I do care about those swing trades for my IRA and stuff, but I want to focus on this video on determining a bias and entry criteria. Once we have a bias, how do we actually capitalize on that? So, today I'm recording this after market close on Friday, July 26th, by the way. It's like 2:20 in the 2:20 Mountain Time, so 4:20 Eastern Time. So we got a big push up today, a push down. So the hourly, using these MACD, but more so just the price action. The MACD can help, but really, what really matters the most is the price action. It's like, hey, MACD crossed here, we could expect some up. But we're in a bear market lately, so if it has this much of a divergence. Maybe we can expect a short, whatever. Back here, big divergence up. Probably can expect a short. What happened? Big short down. Anyway. Yeah, and yesterday was really complicated day, but I didn't have, I need proper entry criteria, and that's what this video is about. I'll make this side note now. This is different from, if you've been watching my channel, if you look at how I trade, you'll notice my chart looks different. It's because I changed it. I gamble. I'm a gambling degenerate, to be honest. Like, my dopamine, I've been trading for dopamine, for stimulation, not to make money. Good trading to make money, it's boring. You have to take the stimulation out of it. It's got to be, it's naturally exciting enough on its own. But the reason I think 95% of the people fail, well, one, they give up, but a lot of people that stick with it for a long time and still fail, it's because they can't get out of that mindset. They can't survive. They gamble too much. They risk too much. When you gamble, part of the dopamine is it has to be enough that it will hurt you if you lose. So that goes into risk management. You don't want to risk too much. This video is not about risk management. This video is just about avoiding those gambling urges. For me, I had the 2-minute chart up. I had the 5-minute chart up. I got rid of the 2-minute chart. I added the 30-minute chart. So now I've got hourly, 30-minute, 15-minute, 5-minute. Okay. So going back to, I know I'm saying a lot. I'm throwing a lot at you here. Make comments, because I love to engage if you have any questions. But back to determining the bias on the hourly chart. So we've seen a MACD crossover. We know it's pushed down really hard on the daily. We kind of expect some pull, maybe a pullback up, or at least a doji. I'm not going to say this because this is all hindsight, okay? It's all happened. But what could we have done backing up here, hiding this so we don't know what's going to happen? What could we have done looking at this to determine that it would go up? Stronger push up here. Remains relatively flat. Breaks below, but gets back up. Bought back up. Doji. Now here at this point, I'm thinking this is either showing bearish. This morning I was thinking this is showing bearish pressure and we want to go down. So I just analyzed it wrong. It does go up, obviously. But and maybe, maybe I shouldn't have been that biased bearish. That's another thing. Like, I see it get bought back up. It gets bought right off this moving average. The MACD is up. That means, hey, we should probably be long. Even though I have this bias short, the MACD is up. And I need to use the MACD more, but the MACD is up. It's been bought off the moving average. It is objectively, we want to try for long. So this has set a level here. Now let's go down to the 30-minute and the 15-minute. Okay, so this is at 8:30 now. This is what we see. I'll make this bigger. At this point, we're in the middle of yesterday's range. It's been really flat. Probably just should sit this out, to be honest. Not trade. It's kind of confusing. But if you're determined to trade, you can realize that, hey, maybe this is a consolidation. Now again, I'm not I'm not advising that you do trade. I think most of trading is sitting out, and you shouldn't take these trades. But you see it dips below, gets bought back up again on the 15 minute. On the 5 minute, it dips down here, then pauses. After the close of this bar, after you see this bar close and you see a big push down, you see a pause, you see this level hold. It's held up here above this moving average for a while. It doesn't look like the gap's going to close. This is a great time to buy long, put stop loss underneath, and hold. And what would happen? Okay, bullish pressure, that looks good. Doji bar. Another doji bar. Big move up. Another doji bar. 75 up to 90, 15-point profit. $750. More bar analysis. Doesn't look too good. Looks more bearish. Okay. Looks like strength is holding. We're above the moving average. Doji bar. You could buy this, the close of this, and just hope that this will hold. So you buy here, 86. Put a stop down here at 81. That is kind of a wide stop loss. $250 if you're trading one contract. But you could go down to 7 contracts on the micro and it wouldn't be as bad. Bullish bar. Bullish bar. That looks really good. Alright, now that looks really good. So at this point, it's like, okay, it's looking like it's going to be a bullish day. You could take profit up here at the top of the Keltner channel. So that's like, we'll just say 490 up to 410, 20 points. So now that's 35 points if you correctly decided to be long. Bearish bar. Bearish bar. Or doji bar. Another doji bar. This is another time you could buy the close of this. Put stop loss right here. Long. Up. 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 Okay. So it does flatten out a lot. It slows down a lot. You eventually would have got stopped out if you didn't move up. But say you did buy the close of this, 508. You know, you could get another 12, 13, 14 points out of it. That's like 50 points. So, I mean, again, this isn't a great trading day, but if you noticed, all of these entries, it's all about a little foundation, a little base is set. A move happens towards a level. We see a pause. We don't buy it when it hits this level. If we go here, we don't buy the close of that bar. Because maybe bears are in control and they're going to take it way down here. But this gets us interested. We wait 5 minutes. We see that. We buy. Because this establishes a base. It shows there's people here fighting for this level. We've seen them push it up already. This is what we want to buy. Here. Push up. The bears try and push it down. They don't. Push back down. At this point, it's like, okay, I'll put a limit order in here. At the close of this, I'll put a limit order a point below, a tick below, and put the stop loss here. So that's a super tight stop loss. It's like 3 points for a great return, ROI. Here, same deal. It pauses. So now we can get into the entry criteria part, because I've done a little bar by bar analysis. I've talked through it. here's my entry criteria. These are not setups. I have my setups. That's a different video. I can talk about that if there's interest. I'm happy to talk about my setups. But these are not setups. These are rules for how to enter in a way that increases objectivity, discipline, and focus. Because if I make the rule, that I wait for that pause, I wait for that consolidation, a base, a foundation. So think of it like a construction project, right? Like if we're building a building, you don't want to just build it wherever. You want to like have civil engineering, make a base, do a construction project, then you can build a skyscraper. We're trying to capture skyscrapers here, big moves up. We need a base that those can come out of. And bases can take a long time to form, right? This is like more for like a consolidation play, what I just talked through. My favorite play is a ABC pullback. It's a flag, basically, where we get strong move up. It's very easy to determine who's in control. We get a pullback, and then we break up. And on those types of days, the market is so strong that support and resistance aren't really held. You actually, like, it's okay to buy after like a little level, after on a pullback. Once it breaks out, like that's kind of when you want to enter. It depends, you know. Entry criteria is kind of different for what you're doing. You can be more aggressive on those really strong days. You just want to join those trends. But again, this is not my setups, this video. This is just entry criteria. So I just want to go through these points real quick. Prior to high, close, low, most important levels. Use these to determine your bias, market structure, strong closes on 1 hour chart to determine bias. I have this little note: market often moves away then returns on not strong days. The market will often move away from, if it opens near the close, yesterday's close, the market will often move away from that, and about halfway through the day it'll come back. Alright, so higher time frames are used for deciding bias. I can probably delete that part. I'm just going to delete that altogether because that's just confusing. And I'm going to add some notes here. So I just made a little note about determining bias. That's not what this video is about. I spent a lot of time talking about that in this video, pretty generally and vaguely, because that's not the purpose of this video, but you need to determine a bias. That's the most important bit. I'll say be flexible, consider you are wrong, and expect you're wrong, and consider alternative hypotheses. And these questions here, I just put these in to help me be objective. Because I had the bias it was going to go down, but it was above the moving average. MACD was up, so yeah. Sorry, a little bit of a sidetrack here, but yeah. Determining biases. So, all right, now we can actually get into the entry criteria a bit. Sorry about that, but I think that will hopefully help and provide a little bit more clarity about what I mean. So, confluence is most important. I have, if we see a base here above this moving average, we go to the 15 minute. We see that base here mostly, and most of this is above the moving average. We go here. We see this hold, that's a long, because we see it holding. It's about putting it all together. Like, we have multiple pieces of the puzzle, and the more we have that aligns saying this is going up, we want to fade the bottom of this range, not the top, the better. So, going back to this list, enter limit order. Yeah, exactly. So, I mean, if it's a fast market, if you need to be quick, like it's at the bottom of the range, you know, enter long here. But here, in this moment, you're not going to be fast enough to just buy it right here. Your emotions are going to be too hot. It's going to be so much better if you see the close of this, enter your limit order right here to buy here, put the stop loss below, you're good. And notice how this is on or near the moving average. This entry is on or near the moving average. On or near the moving average. This is not, but that's okay. Like, it doesn't need to be. Just earlier in the day for the first hour, that is a really good thing to be aware of. Is the 5-minute moving average is very powerful. And this, this is a more aggressive buy, but hey, you still could have squeezed 10, 12, 14 points out of it. All right, so confluence is most important. Bar by bar analysis, that's how I started the video, counting the strength, the ABCs, the zigzags. Zigzag analysis, I'll just call that. And I can do a whole video on zigzag analysis. I can't have a zigzag indicator because I use Tradovate. There just isn't one for Tradovate. But if you use NinjaTrader, I highly recommend using a zigzag indicator, but it's not necessary. And I'm actually just going to delete this other part and put it up here. Okay. 5-minute chart. Closes, pauses, moving average, Keltner channel, or take profit. Yeah, bar analysis, 5-minute. I'll just say 5-minute moving average, or look for bases, foundations to form around the 5-minute 2021. I'll just say 20-minute moving average, or 20 moving average. I don't know if this is 20 or 21, if it's moving or exponential. I don't think it really matters that much. I'll look it up right now and just tell you. It's a 21 EMA. So there you go. Place limit at impulse stop order can be a good area because this often aligns. This is just a tip. This isn't something you have to do. But like earlier today, like basically what this means is like, this is very subjective. It's not like scientific or analytic. It's just more of like an art, which isn't good. And I don't think, I probably should just get this off. But I have a professional trader I do know does this, and I do feel like maybe there's some use to it. Because guys, like going over this after the fact, it's so easy. Doing this in live time is like impossible. Like I know Al Brooks has a statue of a golden rabbit on his desk, and he's like picking where to buy or enter when you're in hindsight, it's just like grabbing a rabbit off a desk. But actually entering in live time is like if that rabbit was like a real life jackrabbit that could speed around. It'd be like so hard to grab. So it's really easy. Don't get fooled. Like it's easy to look at this after the fact, and it's easy for me to sit here and be like, hey, look at this is how easy it is. But guys, I'm not profitable yet. You know, I'm working there, and I feel, you know, I'm 2.5 years in, and I know my analysis after the fact is pretty good. But anyone can be a technical analyst after the fact. It's live time. And this is how I learn to be better at it, is going through and making these videos. So like this is practice. This helps me. Like that's the main reason I'm making this video, is because it helps me. I want people to see my process and learn, and I want to keep this channel running forever, basically, as long as I'm a trader, and which will hopefully be a lifelong endeavor, and be able to like go back and point back and be like, look, I struggled. This is how I figured it out. But yeah, I'm not perfect, far from it, and I have a lot to learn still. But say that all that to say this: impulse stop order. Say I like have an impulse and I'm like, oh man, I want to get long. Or say I want to go short. Oh, this is a real example. This is what I did earlier. I wanted to get short above this. I thought sellers would come back in. So I got short here, right here, 5495.96. Yeah, 5496. My stop loss was up here. Market went up, stopped me out, came back down 20 points. 25 points. From here to here, less than 10 minutes, we got a 27 point move down. The impulse stop theory is like, okay, I want to get short here, but instead, and if I were to get short here and my stop loss would be here, instead of getting short here, I'm gonna put my short order more where my stop loss would be, and then I'll just put that stop loss like above the Keltner channel. So had I done that, put the stop loss here, it would have been better. It just helps you slow your own brain down. Ideally, you know, these points above would be better. Tip. But if you're feeling impulsive, and because it is so damn hard to make good decisions in live time, this can help you get a little objective and clarity. And we want to make limit orders. Limit orders help us a lot. So, yeah. I'll close. This video's been a very long one, so I'll wrap it up. Go over the last 2 bullet points pretty quickly. If you don't see anything in the first 60 to 90 minutes, just don't trade. You can come back and check at the halfway point of the day. So, sorry, I keep pausing my talking to write stuff down. I can't multitask, but I just want this to look really good. And I'm gonna put this list. I'm gonna copy this and I'll put this in the description of the video. But yeah, just trade the first 90. We're day traders. Part of being a day trader is you don't want to stare at the chart all day. You want to have freedom with your time. So it's really important to step back and not trade and just, I'll say in the first 90. But yeah, focus hard for the first 90. You can, if there's nothing happens, you can come back and check. You can come back and check, an hour and a half after you stop. I'll keep it at 60 to 90. Because the market does like to switch direction and come back to where it's closed. And then look at the market moves between bases and foundations. You want to trade the market. You want to trade when the market is making bases or is making moves out of. They can be made as quickly as a 1 minute, 2 minute bar, or they can last a long time. The type of base you want to trade depends on the market structure and price action. After a win, keep looking at for new move to moves. So yeah, guys, this is it. This is my entry criteria. I'll copy this right now and I'll put it in the description after. Kind of an all over the place raw video today. Not, well, it's kind of typical for me, but as of lately, I haven't really done much like this. So if you like these types of videos, comment and let me know. I try to drop a lot of wisdom in these. Again, there's a lot of people who are smarter than me who you should be listening to ahead of me. Market Wizards books, Tom Hugard, Adam Grimes, Linda Rashke, Al Brooks. Learn everyone. I'm just a guy who's sharing what I know, and I want to capture my whole journey from struggling, frustrated trader to profitable trader online. And I fully acknowledge that it's probably going to be a multi-year thing. I mean, I am 2.5 years into this. So I've been doing this a while. And I've been recording and reviewing my own stuff since January of 2024. So about 7 months now, which is crazy. Probably really got consistent around March. But yeah, that's what I'm trying to do here, guys. I'm not trying to say I have all the answers or I'm the best trader. Far from it. I'm not anywhere near where I want to be. But I have faith in myself, and I want to do this as transparently as possible. So these videos help me a lot, and I'll use clickbaity titles or whatever because that's what you have to do on YouTube to get an audience. But I try to have the most good, transparent, not giving you false expectations types of videos. I want to be legit and good and respected and honest because there's so many scammers and fake people in this industry. So I care about, doing it right. So that's my rant. I hope my entry criteria video helped you. The big thing is just you have to have that bias. And then after you have the bias, wait for confluence, wait for bars to close. Use bar by bar analysis. Look for bases to form that moves can come out of. Limit orders. Use limit orders. Um. Anyway. That's it. I'll end this video here. Really appreciate you watching. I like doing these long journal rants. I want to engage with people and help others and whatever. If I don't think a more experienced trader than me would be watching this, but if you are, drop some wisdom in the comments. I think biggest piece of advice for anyone out there, even people who are better than me, is just your path to being better is inside you. After you've learned the skills, you got to figure it out. Like, look internally and figure out, how you can get better. Because we're all different. Our paths are all different. You shouldn't be on social media comparing yourself to others. You should just be looking inward and thinking about how you can be the best version of yourself, what habits are holding you back, what habits are good that you should expand on, and just be really honest with yourself. And hey, record yourself too, make a YouTube video. I think that helps a lot too. So thank you for watching. I hope this is helpful. Hope everyone's doing good out there, taking care of themselves, eating good food, getting exercise, getting sunlight, hanging with good people, good friends. It's all really important. So everybody take care, take it easy. Appreciate you watching. Peace.